Okay, good afternoon, everyone. Are we audible? Can someone show with the thumbs up?
Yeah.
Yep. Okay. How many participants? Okay. Good afternoon, everyone. On behalf of the Indian Space Association, it's a pleasure to welcome you all today to ISpa's expert webinar on decoding the SpaceX IPO. The commercial space sector is witnessing unprecedented growth driven by innovation, private investment, and new business models. At the forefront of this transformation is SpaceX, a company that has redefined launch services, satellite communications, and the commercial potential of space. While discussions around the future of the SpaceX IPO continue to generate global interest, the subject is much larger than a single listing. It offers an opportunity to understand how modern space companies are valued, how their assets and technologies translate into long-term enterprise value, and how capital markets are shaping the future of the global space economy. For India, these developments are particularly relevant. As our space sector expands with greater private participation, understanding of investment dynamics, commercial sustainability, and financing models will be essential for building globally competitive space enterprises. Today, we are privileged to have eminent experts from IIFCL, the India Infrastructure Finance Company Limited, who will take us through the valuation framework, business models, financial outlook, and the broader implications of the SpaceX story. Our speakers for today are Akshar Johri, AGM of IIFCL Projects, Rajat Kumar Singh, AGM IIFCL Projects, and Ms. Deepika Arora, DGM IIFCL Projects. I encourage all participants to make the most of this insightful session. We will take questions at the end. You may type the questions in the chat box or raise your hand and wait for your turn after the talk is over. With these words, I warmly welcome everyone joining us today in this session, and I invite our distinguished speakers to take the session forward. Presentation.
Good afternoon, one and all. I hope I'm audible to everyone. Thank you, first of all, to Indian Space Association, Lieutenant General A.K. Bhatt, Group Captain Anand Rao, and the entire team, that we have been given this opportunity to speak today to you on one of the most historical economic events in our times. That's the SpaceX IPO, the largest IPO listing in the history of the world of capital markets. And the idea of doing this session is to take you through what the valuation was, what sort of, how was this value calculated, what does this IPO and the document that came out entail, and why is today's SpaceX IPO being looked at one of the most tradable commodities in the capital markets. So in this presentation, we'll take you through various sections. Before we start, let me just give a disclaimer out that the information and the financial data and the operational metrics that are shown here are purely based on the prospectus, which is called as the Form S1 of the United States, which is given by SECI, there's Securities Board, what we call a DRHP here in India, and all the projections are based and all the forecasts are based on that document and whatever we could find on the internet, based on the reports that were published pre and post the listing. So this is not an analysis by us. It's mostly a deep dive into what the document says, how the document was formulated, and what is it that makes a valuation so strong for a young company or for a monopoly-based company. Next slide, please. Synopsis will cover the launch vehicle market, of course, satellites, Starlink, Starshield, XAI, and Grok. The idea of SpaceX IPO is built on three pillars: space, connectivity, and AI. Next slide, please. We start with the first section, which is the offering. The terms of the deal. Let's get to the brass tacks immediately. Offering of the price was $135 per stock. The share offers were 55, 555, 555. In the metric that gives you 75 billion, roughly around 74.98 billion, but we can call it 75 billion. The implied equity value is 1.77 trillion. Now, what is an implied equity value? What is the issue size? And what is the retail size? These are all numbers that we want to address today. The settlement was done on June 15, 2026. Soon became one of the most tradable stocks in history. As we speak today, this is a post-listing analysis. This is a post-listing deep dive. So the stock is trading at 152 since this morning. It was at 160, 161 a couple of days, 162 couple of days back. So it was oversubscribed. And yes, Elon Musk has taken more than $70 billion from the market. So that's, again, good or bad news that we'll have to see in the coming times. But let's understand how this value was reached and what is the existing performance of the company. So again, largest IPO in the history of the world. If you look at the previous record, which was held by Saudi Aramco, and if you look at this bar graph very carefully, you'll understand that, Alibaba, SoftBank in 2018, Visa in 2008, Meta in 2012. These are, again, companies, barring Meta, which are all fairly developed companies which have, been in the market and has dominated the market, to quite a few extent. And they have also made their listing almost. They've also made their listings, like Saudi Aramco made it at 2.5x of its existing price. But 75 billion, asking for 75 billion from a company where the top line is 18 billion is it's almost like unheard of. So all the more reason why we should be deep diving into it. Again, let's get back to what the IPO says. There are three main engines to the company: space, which is launch and transport. We all know SpaceX is basically a launch vehicle, a rocket company, primarily to begin with. Connectivity, Starlink, and of course, there are mentions of Starshield, their Earth observation system as well, which has a top line of $11.4 billion. Space, it gets in $4 billion. The third is holding companies, which are XAI, Grok, and X. There are three holding companies made. SpaceX has a holding company of XAI, which holds Twitter and Grok together. That brings in a total revenue of 3.2, which makes the total revenue of the company, the top line of the company, at $18 billion. Key milestones to understand: SpaceX started in 2002, 2008, first private liquid fuel rocket happened between 2002 and 2008. NASA did COTS, the most important aspect because of which the Falcon 1 was born. 2015, first productive booster landing happened when we all saw it, the booster landing came out. Reusability was enforced. Connectivity, on the other hand, has had, a different ballgame because it started in 2019, got a surge after the Ukraine war. We'll get into that in the connectivity section. AI is fairly recent, started in 2023 and went all until 2026. I think the first gigawatt scale AI training cluster has been involved. We'll get into Colossus, we'll get into XAI, all of that. Next slide, please. Now, one thing that I think we need to inform people is that this is also not just a historical listing in terms of its ask, it's also a historical listing in terms of its retail allocation. Typically, retail allocations of any offering is 8 to 10% of the total issue size. So if you have an issue size of $5 billion, 8 to 10% is what is asked from a retail market. Here, it was 20%. That means out of 75 billion, 15 billion is coming from the pocket of consumers, retail consumers, people like you and I, who buy stocks. And a lot of it was not an afterthought because we'll get to that, how many arrangers and how many banks were involved in it. But it is also, and based on the analysis that we have done as a team, I think it was also the Musk factor. The single biggest driver demand was Elon Musk himself because his brand is extremely synonymous, not just with companies or institutional investors. his monopoly is also there with the kind of fan base he enjoys with younger people. He's a very recognizable figure. And that also made this IPO listing into more like a cultural event. So the must factor is very important when we need to look at the brand value of SpaceX. Again, another historical milestone is $500 million given for syndicate to this entire syndicate. Every major American bank and every co-arranger bank was involved, whether it's Citi, JP Morgan, Goldman Sachs, etc. And $500 million was given. That's almost $500 million. And again, historical listing because the stock is a success. It's currently trading at a higher price. So the syndicate and its co-arrangers were able to tap into multiple institutional investors. Retail is one aspect of it. The other part of 80% stock listing goes to institutional investors. So they were also able to raise capital. The big question here that we are trying to address is how does a company which makes only $18 billion justify a 1.7 trillion valuation? The numbers are in front of you. And I would now like to invite my colleague, Deepika Arora, to take you through what are the basics of valuation. How is a young company valued? What are the methodologies? And then we'll get into the valuation part of things.
Okay, thank you, Akshat. And very good afternoon to everyone. Thanks for joining and being with us. So he's actually laid out, the offering, what the offering has brought to NASDAQ. And again, we are sitting at this question now that why this 18.7 billion revenue company has this big valuation. If we try to answer it in simple terms, I think it is not just this earning. 18 billion is not what is driving this IPO. What is driving this valuation is the future potential opportunities that have been laid down as part of the entire platform, which has been set up as part of this document. So I think we'll detail out what the venture capitalists, what the investment bankers have actually looked into this, and they have assessed this valuation. Next slide. I think before I enter into the basics of a startup valuation, we would try to understand when the venture capitalists and other investment bankers have seen into this IPO, what are the various methodologies that they use when maybe for this IPO or for any other IPO. What is this comparables? What is the cash flows and what is the future value, exit value, all these terms that they go through when they're projecting the future cash flows, when they are benchmarking it against all the other IPOs which are available or maybe coming out in the near, years. However, before I go into that, I would just like to say that 555 million shares at $135, it is the base price which was thrown out to the market was about 75 billion, right? Which is giving an equity value of 1.77 trillion. So the multiplier effect which has happened here is something that is coming out of plain valuation and not at what, what is SpaceX sitting. It is already a listed share and it is, performing where it is. But what is it that it is giving such a multiplier effect to it? So to understand this, I think we'll get into this step by step on the basis of these methodologies that are adopted. Yeah, next slide. So this is what I was saying, the terms of the deal. What was given to the market to be raised was $75 billion. And what has come out is 1.77. This is the entire enterprise value that is sitting based on this IPO which has happened. For just to understand it in layman term, we're just quoting here that maybe, if to understand we are selling out a house, we are selling out a portion of the house, only 5%, which is a 10 crore property. And if you are selling out only 5% of this, that house does not become only 50 lakhs, right? The worth of the house still remains to be. In fact, if you do a deal on such a house, that actually increases the value of that product. And this is what the implied value is. And this is which is the differentiating number, which adds to this stock also. The base IPO, if we see 1.77, which is right now the value, if you see only 4% is what has been offered to the market as a share, which is the 75 billion. In fact, out of this, we see that a lot of institutional investors, as Akshat was detailing, most of the investment bankers and big banks have participated in this IPO. 20% though has also been given to the retail investors, which in itself is an exception. Because generally for such mega IPOs, it is a 5 to 10% range only. But again, the Musk factor that he defined, which has actually brought in that 20% at such a valuation. Next slide. So since we are talking about the basics, there are generally, if we see the approaches that we follow is the market comparables, the discounted cash flows, and venture capital method. These are three different approaches. It's important to understand that, they don't work in isolation. When we are understanding stock, the venture capitalists will bring them together and they'll be triangulated together to understand, what the valuation is expected out of the stock. Market comparables, of course, it is very easy to understand what is any other peer company which is available in the market, which can help us understand what should be the valuation relative to any other company which is actually performing here. Discounted cash flow, it's a very simple, I think it's the most commonly used method where you take a discounting factor, which is the combination of the cost of the debt and the equity, and you discount the future cash flows and the projections which are available for the company. And venture capital method is something which is sitting on the exit value, basically the terminal value that the investor is looking at. That is, maybe if it's a giant number, then we have a target IRR number, and then we take out the present value. So this is to understand what the investor wants to put into that stock right now to get that value at the end of the period, or whatever specified period we're talking about. All the advisors and investors, they will typically run all of these when they are valuing the stock, because a combination of these will help to balance the weakness of any one of these. For example, if you're taking a DCF method is totally relying on the numbers or the projections that are being put for the IPO. However, these are all sensitive numbers. These are based on assumptions. One number goes wrong, maybe a growth rate or anything which is overvalued, then it will take the stock to another level. That is where the market comparables will come in, because what the market comparables will do, they will actually bring down those overinflated cash flows. And or to the contrary, similarly, if you're taking a market comparable method, it is if the market is entirely bullish at one point of time and there is a bubble in the market, then the comparables will actually show a very high number. In that case, the discounted cash flow method will help to actually settle that and balance that and bring it closer to what the business actual value is, based on the fundamental financial matrix that it carries, based on its numbers and the business that is projected. And with the combination of both of these, when we talk about the venture capital, so there is always a risk or a premium which is attached to any stock. There could be a number, even if we talk about this IPO only. If the DCF says that the stock of SpaceX is valued at about 2 trillion because it is inflated. However, it could be said that the market is only 1 trillion, that TAM is only 1 trillion, that we understand based on the balancing of all these methods that there's an overvaluation of the stock. That is how the venture capitalists will settle these and adjust the risks and the premiums to the value based on the combination of all these three methods. So this is just a basic of, what an investment banker will see when the stock comes out of a public issue. And we'll try to relate all this to the, IPO which has come out here, and how the three business segments which have been captured, which Akshat just mentioned, because this IPO is sitting on three engines: the rocket launch, the AI, and the satellite internet. So how is a combination of these, all the projections which have gone into, and what are the comparables that have been taken? That is something we'll look into. Next slide. So let's just briefly, I'll just take you through all these three methodologies and how they are related to this IPO. When we're doing a market comparables, see, it's a very similar method. There are peers in the market. There are base stocks which are already trading. You just need a comparable in the market to see the value which has been provided for that stock. What is important here is that you get the right peer in this case, which is not possible in the case of this IPO if we talk about SpaceX. Here, what generally the analysts will do, they will average it out. They will do sum of the parts analysis, as it is called. Because if we talk about the rocket launch segment, the legacy defense companies and the aerospace providers are the only ones, or maybe some other players, however, they may not be working at the scale that SpaceX is doing. But that comparable becomes very important here. If we talk about the satellite internet, then the comparable could be any telecom or a broadband company which is already functioning or listed in the stock market. Again, and simply with the AI segment, because for AI, there is a lot of valuation that has been put on this IPO because the addressable market and the future potential, it has been taken as the world's largest upcoming business, the AI segment. So for that also, getting a peer and a valuation which is for a listed stock, it was very difficult. So simple method, you get these, you average them out, and you then gather the multiples. What are the multiples here? The multiples are your enterprise values. Now, let us also understand that the enterprise value is different from an equity value. The implied enterprise value is something that is available to all the financiers who are getting into this stock, be it in the form of debt, be it in the form of equity, as against an equity value, which is only available to the equity shareholders and the equity investors of the company. When we look at the formulas and the ratios which are calculated here, EV on revenue, EV on EBITDA, it is actually showing what top line is available to these investors. EV on revenue will give, because top line is a very clean number. It has no expenses, it has no overinflated things. The revenue that passes on to these enterprise investors is something which are the multiples that we gather here. And then they are compared to the other peer groups. Similarly, what happens is with the EBITDA. Now, EBITDA, when we talk about, of course, we'll detail out on, the adjusted EBITDA and other connected numbers that work around it. But EBITDA is the pure free cash flow. This is what is available. We add all the non-cash items to this. And what value is available to the enterprise investors is what we get as a multiple here. Price earning ratio, I think it's a very, very basic ratio that everyone, generally runs through, which is what price is the investor, or, maybe I as an investor. Sorry. So P ratio is what price that I as an investor am ready to pay for the earning that is coming on that stock. All of these is then adjusted for the differences, because there are certain companies and there are certain premiums which could be attached to these acquisitions because of the businesses that they're running into. Next slide. Now, second method, I think it's a very commonly known method, which is the DCF method. The most important, I think the formula is right there laid down in front of you. It is the future free cash flows that are available. These are discounted at the weighted average cost of capital. The weighted average cost of capital is nothing but any, risk-free premium. It is the addition of your cost of debt and your cost of equity. Cost of debt is very simple at, whatever the market rate where the lending is happening in this sector. Then cost of equity is your risk-free premium, which is absolutely anything that you would maybe earn out of a government bond is your risk-free earning. On that, you add or you adjust your premium. This is what the cost of equity will be. Now, what has happened in the case of SpaceX? Okay, I'll also mention about beta here. Beta is something which is the premium or the difference, that happens when you're calculating the cost of the equity. What this IPO has done, it has actually changed a lot of these functionings for the comparable stocks. The beta that is happening for any other similar stock, like for SpaceX, the beta has been really, really high because there is a lot of investment has really come on the confidence, on the future potential opportunities, on the reusability of the rocket that has been put on the satellite internet, services that have been portrayed into this IPO. So the beta that has been set for this sector or for a vertically integrated business segment company like SpaceX, that has actually changed the entire scenario, not for only maybe comparable stocks today, but maybe some more stocks which are, going to be listed in this segment in the coming future. So that beta has really played a game, and it has worked out differently based on the listing of this IPO. So the valuation and the calculation is simple here. We will actually take the free cash flows. We will actually discount them at, this WACC, which is calculated for the stock. And of course, there's a specific period. When we're talking about SpaceX, we're talking about a projection of maybe 5 to 6 years. And after that, also, there is a terminal value. There is an asset creation which has happened as part of this entire, listing. That is the terminal value. Now, that terminal value is also added when you are actually calculating the entire discounted value of the stock. When you're discounting this, how does this help? It will actually take away all the, market sentiment, the market hype, which goes into the listing of the IPO. It is going to actually give out the intrinsic value based on the fundamental financials of the company. So this is a very, very useful method. However, when we compare all these for this IPO, I think because if you go through the document, there are hardly any concrete projections for a specific period which have been listed in the document. So that is the reason that, DCF. So that is the reason I think that DCF really needs to be read along with the other methods when we are studying this IPO. The third one, which I mentioned, was the venture capital method. Next slide. So this was, as I mentioned earlier, it is based on the exit value. You have a target number. I think the formula is really set out here. There's an exit value after a period for which the projections could be taken by the analyst. You have a target IRR, which could be a very high number or low number. Based on that, you're discounting it to the present value. So out of which whatever investment is going into the by an investor into that IPO, that when you set it off, or maybe you take it out, net it off from there, then you get the pre-money value, and including that investment is your post money. This is how the investors look at it. And in case of SpaceX, this IPO, I would like to state here that this method really plays a very big role, because the VC principles have really been applied very, very aggressively when valuation of the stock has been, and that's how the 75 billion is being seen as the 1.77 trillion. Now the venture capitalists they've basically based it on the reusability of Starship. It is really that confidence which has gone into this principle when you are using the venture capital method for this stock. They've really seen how Starlink is going to be getting an expansive internet subscribers. And it is also, the VC principles have also looked into how the AI is going to be the world's largest business, and SpaceX is going to be the major contributor. Next slide. So now that I've explained these three methods and how they go in together, that is how the SpaceX model has been unique. When we are reading this entire document and putting it forward, there is no pure play comparable. There is no such vertically integrated business model company like SpaceX, which is present for the comparison of this stock today. The launch and the broadband and the frontier AI, they are all, there are no listed peers who are actually working in all these segments. And the way it has been actually integrated by Elon Musk is something which is giving that valuation to this company. Reusability, of course, when we are talking about the reusability of this rocket, it is not only, increasing the capex, it is not only increasing the revenue and reducing the cost of every launch. It is actually rewriting the entire space transportation sector here. The Musk factor, Akshat has already covered, the personal following that Elon Musk has really added to this venture capitalist view. And that is also something which has added to the value of this stock. TAM projections, because we've not gone into the detailing of every business segment and its projections. I think this TAM, which is really playing a very, very big role, because he's addressed major businesses which are going to be huge. Founder control, if you go through the document, is divided into Class A and Class B shares. So in spite of such a a big retail investment that has flown in, 82% of the voting power still sits with the promoter, which means that the major decisions are still going to be handled by this team, which is headed by Elon Musk. So it actually gives more confidence when you're getting into this stock. And it is priced on optionality. It is not priced on earnings. As we see, 95 times more EV has gone. Based on the 18 billion revenue, what has come to him is 1.77 trillion. So that is, the investor confidence which has played here. So yeah, so I think this is how we can see this IPO based on the valuation techniques which are already in place for any IPO. And I think from moving forward, we will proceed to the Starlink. I think we'll break it down into the business segments, which is the rocket launch, the AI, and the internet usage.
Okay. Thank you, Deepika. That's extremely well explained on what the basics of valuations are and how the valuation was done for SpaceX. So I think that, as she mentioned, there is no calculation. Let me just reiterate this again. On any, by the way, there are no projections mentioned in the IPO document. It mostly talks about TAM and the availability of TAM, something which Rajat will get into in the numbers section. Let's get to the section 3 now, which is the space section and the connectivity section. I think I have to say this, Starlink is really funding the dream, because out of the $18 billion of what the revenue is as of today, maximum revenue was brought by connectivity revenue, which is 11.4 billion. And their EBITDA margin is almost 63%. During the time when Starlink was announced in 2019 to today, I think over 12,200 satellites have already been added, probably more. I don't know what the cadence is. He keeps adding more satellites every other week, but let's say it's around 12,000. And it's really the cash engine of the company, if you think about it. Because Starlink is now growing in its customer base every week and every month as we speak. And even in India, we're looking at that proposal very seriously with the D2D connectivity, something which we'll get into later. Next slide, please. Okay. Now, the biggest reason why Starlink has sprung into action since 2022 is the advent of the Ukraine war. We get into the timeline bit of things, but 12,300 plus satellites. I said 12,200. You have to understand that between the Ukraine war to today, 10,200 satellites have been added. And this is the biggest, takeaway for us in the Indian economic environment, because when defense spends, I think companies are able to scale up much quicker. And we see this in the next slide. When we look at the evolution part of things, 2015 is when it is announced, 2018 is when the first prototype is announced. 2019 to 2021 commercial rollout happens, and you first start seeing some, I think back in the day, social media was showing, all these DIY antennas which are sort of getting connected. Feb 2022, Ukraine, the turning point happened. Then Biden government announces that, we need to send internet because Russia is cutting off internet in the war-torn region of Ukraine. And DoD awards a contract of $537 million. Now, that's where you have to understand Falcon 9 was already at its peak. It was doing over 100 launches a year. And through rideshare mechanisms, so much Starlink satellites were put up that right now at 12,000 satellites with LEO, he has virtually no competition. That monopoly aspect of Starlink, of connectivity, really makes the IPO and makes the offering extremely valuable. Because when you look at LEO satellites today, Amazon LEO, which was known as the Kuiper project, is still being developed. They're still looking at satellites. OneWeb, Eutelsat, even broadband players and telecom players in India are now wondering how we do it. We have one of our largest players, Reliance, just announced that 1650 satellites will be put. So he already has a big delta lead over the others. And a lot of it had to do is with the launch vehicle cadence, which we'll get into later. Currently, 10 million plus subscribers make Starlink the world's largest LEO constellation. Starshield, again, is his Earth observation project. He's getting into that as well. Long-term government contracts and strengthening SpaceX positions is happening. The Space Command has already started rolling out, defense contracts to Starshield. So that's another aspect which is a part of connectivity. For SpaceX, the company, Starshield, Earth observation, Starlink, internet connectivity, and XAI are all a part of the connectivity platform of it. So they don't isolate them. They understand that for defense requirements, they all need to be talking to each other, what we call ISR here in India. The runway ahead, as you can see, if you look at the current market, the total addressable connectivity market, the TACM, so to say, I understand the delta is very less today, 11.4. And mobile TAM is way higher because a lot more people are using the internet on their phones. And of course, broadband TAM is the highest. We're all correctly connected on broadband. But just think about this. In India, we have spent almost 20 years, 2 decades to come to the TAM of broadband that we are today. Telecom towers, optical fibers, relaying of optical fibers. That is very capital intensive ground infrastructure. Whereas what he's doing is he's eliminating the middle section. Today you don't need a SIM card to get his internet on your phone. It can happen direct to device. And that is making a major surge in the market. Again, we can't be quoted on this, but from the market assessment, approximately 60 to 75,000 new Starlink satellites for the next decade will be added. That's a significant amount of coverage of the entire Earth. And yes, at 11.4% with 1.6 trillion market captured so far, there is still 99% opportunity that he needs to take, which is something that we'll see within a period of time. India's direct-to-device policy is out, and Starlink is obviously a big contender. Need I say that it's a major threat to all telecom operators sitting in India, because we still are based on, this is the dichotomy of Starlink. On the one hand, he has the controlling power of the infrastructure, which we are still to make, number one. Number two, we are still looking at, having our existing telecom networks with the Jios and the Reliances and the Airtels of the world. So we are also a country where 75% of the population stays in rural areas, where there is no connectivity. Starlink is important to boost rural connectivity in India. But this is a question that, as the audience, you need to also ask, and the telecom operators and the regulators have to ask, how much power is vested with one company and what that monopoly is going to be in the future. Next slide. Okay, let's get to the most interesting section of the IPO now. Rockets. For the longest time, SpaceX has been known as a rocket company. The company that made the Grasshopper project successful, the company that made Falcon 1 successful, and today we have Falcon 9 and Falcon Super Heavy. But why is it so important? And this is, I think, a major debate amongst the three of us as presenters here. But I would like to give you my perspective on that part. Space has been a very long decade. To this date, 650 orbital launches have happened from SpaceX. 7,400 metric tons of satellites and components have been put because of this. And the launch vehicle bit is extremely crucial to understand whether Starlink will be a success or not. Because without the vehicle part of things, you cannot have access to space. And reusability is a critical component of it. 11 of 12 national security space launch of medium and heavy missions in 2021 are all done by SpaceX. All of the 5 NASA-proven cargo missions to the ISS in 2025 were done by SpaceX. Falcon was introduced to create the idea that it will be servicing the ISS. But today it is the mainstay vehicle for every startup and tech company including India, by the way. All the people in the audience who have startup companies are looking at Falcon 9 launches in the future. Next slide, please. The evolution of the space rockets, undoubtedly the greatest of them, Saturn V, was built at a time when there were no PCBs, when there were no proper computers. And in my opinion, still the greatest invention of mankind in the last century. But if you look at the evolution from there on, whether it's the 1980s space shuttle, which of course did a lot, for the INSAT, for the GSAT, for the geo orbital part, to Proton, to eventually the Delta IV Heavy, and then Falcon 9, the evolution has been long. And all of this stops at the idea that they have been mostly expendable launch vehicles. This is the fleet currently of SpaceX when you talk about the reusability part of things. Falcon 9, 23 tons to LEO. Falcon Heavy, 64 tons to LEO. Dragon capsule, with the Pika heat shield, almost 78 crews flown and for 20 different nations. And then we get to the big horse of them all, Starship. Starship is the difference between Falcon 9 and Starship. Falcon 9 is partially usable, whereas Starship is pitched as something which is going to be 100% reusable. That is not a statement which is a technical statement or a scientific statement. That's also a financial statement because it changes everything. Let's get into it. Again, the proven workhorse, 620 launches, 23 tons, current dollar rate. Again, please don't quote us on this because this keeps shifting. Let's call it for a full rocket, $2,700 per kg. It has gone as high as $7,000 to $8,000 per kg for last few launches also, but that's mostly for rideshare. But again, this is still a big number. For any satellite company, or booking a launch is capital expenditure. So thousands of dollars with the dollar price increasing every day and every week fluctuating is significant capex for any young company. Correct? Let's understand how Starship will change that game. This is currently Falcon 9 against the field. As you can see, every rocket right now is mostly expendable. I have not put New Glenn here because they're still in the testing phase, but these are the operational rockets, including our very own LVM3, which is up for TOT right now. They have expendability built into them, but they don't address the cadence part of things. What is cadence? Let's understand. Cadence is the frequency of a rocket launches over a given period of time. What is the frequency? For example, Falcon 9 launched, SpaceX did with Falcon 9 170 launches last year. 170. If I divide 365 days a year by 170, we get 2.12 days between a single launch. That's crazy amount of frequency, and that's the amount of tonnage that you can put up every time. If, let's say, the occupancy is 80% for a 20-ton vehicle for LEO, you're putting 20 tons. Your access to market is 20 tons. And not to forget, some part of it comes back to Earth again for reusability. So your capital expenditure, your cost is coming back. That is the advantage on which they are able to, inflate their bottom line and bring down their cost. Because reusability as a technical, scientific method has really helped them in boosting their books. Starship, again, 2025 space revenue looks like $4.1 billion. Adjusted EBITDA is 0.65. The R&D funded was almost $3 billion. Now, I know this looks like a big number, but please go and check out the numbers of SLS that took the Artemis. That number is way higher, and that's just an expendable launch vehicle with two of the largest companies, Lockheed Martin and Boeing, doing the funding. So if you look at those numbers, they look far more profitable in an investor's eyes. Please understand this from the idea that what it does when you have a reusable rocket. If a reusable rocket, every recovered booster directly strengthens the P&L. When your recovered booster comes back and lands successfully, if let's say the rocket was $100 million in its entire build, in its bill of materials, if 40% of it comes back for reusability, that 40 million hits in your P&L. That's profit in your books. And that's the amount of money that you're able to, and this is, by the way, this is above and beyond what you have already earned by selling it on a margin. 100 million rockets sold at 150, 40 million comes back every single time. That is adding to your profit. Do the math and you'll understand that, how much profitability there is in the books if reusability is brought into picture for every new launch vehicle company. And basis on that, if you look at the current, technological claim that SpaceX is making, that this is going to be 100% reusability, Starship eventually aims to bring down the cost to $135 per kg, from $3,000 to $135. That is something which will be extreme, that will make access to space extremely affordable. It's going to be the reason why Starlink will grow, because they will be taking more Starlink satellites up. And that will also somehow boost the orbital data center mission, which they are looking at. Fully and rapidly usable, 100 tons orbit access, radical cost collapse, and constellation at scale. So your XAI, your data, and your access to the internet is all dependent on this one launch vehicle. Next slide. Again, I think we've already gone through this. Next slide. The step changes are very, very clear. Falcon 9, 23 tons, Falcon Heavy 64. Future Starship is looking at 200 tons. He's already had that in the plan. When I see this from an investor's lens, now this is a lot of, probably this sounds more like we are in awe of it. But it's very hard not to be, because the idea that this launch vehicle is, edging the game and is changing the game, not just for today, for decades to come. When an investor looks at this, reusability has been a proven tech for this company. It's not an unproven tech. So when I am putting in money, and we all saw what happened in October last year, the booster of Starship did land absolutely pragmatically in front of our eyes. And if you look at the evolution of Falcon 9, doing it in the next 2 years or 3 years and Starship replacing Falcon 9 is not that big an ask. So going to a future Starship as an investor over 200 tons is not a very distant dream, or is not something which is very far in the future. Launch monopoly has only widened because there is absolutely no rival. One of the reasons why Elon Musk was able to raise so much capital from the market is because Tesla, the then-made company, is currently one of the largest traded stocks in the market. And please understand, Tesla was not even the market leader or the largest market share in the automotive world. It's probably fourth or fifth in North America, but it's still the most successful stock. This, however, already has monopoly across all sectors. That is one of the biggest reasons why the SpaceX stocks was oversubscribed. I would now request my colleague Rajat to talk about XAI and X.
Thank you to the room, and I think with the limited time, I'll just quickly take you through the numbers, a little glance into the S1 form and the issue that was introduced by SpaceX IPO, and what are the key terms and what are the numbers that we're looking at in terms of the revenues and the EBITDA, and what is the projections, and how will this stock, I mean, this is just a speculation, anybody and everybody in the market has so far been speculating about what the stocks will become, how it will be, what the final numbers would be or would look like. So without wasting any much time, I mean, my colleagues have already touched upon the connectivity part and the launch vehicle section. I would like to take you through the AI section. The connectivity, that is the Starlink. I mean, I don't know how many of you used it, but it's quite a stable platform when you're taking flights or when you're sitting in remote locations. It has increased its consumer base to almost 10 million users, and seen a 33% revenue growth year on, I mean, so far, which is a significant growth as far as the connectivity company is concerned. Launch vehicle, again, even though it is a capital intensive business, it has seen a lot of revenue. It's at an operating loss of around $0.4 billion. But when you come to an AI section, the numbers are vastly different, and it is a game which has to be considered not just a few years down the line, but it is a capital investment which will make anybody a leader, or it can tank your entire investment. So it is actually a bet which can actually make your company into a blue chip company, or maybe more than a blue chip company. Then you may have to coin a new word for it, or it may just completely spoil the entire plan that Starlink has, SpaceX has. Now, the ticker called SpaceX has 3 segments: launch vehicle, connectivity, and AI. The third section called AI, XAI, was recently merged into this ticker. And the reason for this is the speculative part of this entire IPO or this entire issue is the AI. The other 2 segments are mostly established. You have already achieved revenue numbers from them. You have already made a significant capex, and they have started giving returns. This is one segment which is yet to give returns, requires 4 times, 5 times of the capital investment that you require for the previous 2 sections. Plus, if I have to see a multiple, you have to make investments roughly around 4 times or 5 times of the revenue that you're generating currently from the AI segment. If you look at the numbers briefly, what you'll see is that the AI segment, I'm just talking about the AI segment right now, it's $6.36 billion negative. The adjusted EBITDA for FY25 is negative 1.24. To give you a context why this number is so negative and why is this so much money has to be invested, I mean, technically speaking, if I take 300 megawatt of an AI-based data center, it requires 200,000 GPUs. Each GPU costs around $20,000 to $40,000, depending on the kind of GPU you're using. And you require a huge amount of power to run that system. So this kind of investment you have to make if you have to achieve a TAM of roughly around $20-25 trillion, which this company is boasting about in the next 5 years. So if you look at the numbers that I just spoke about, the revenue that AI has so far generated is 3.2, and the amount of capital expenditure that you're making is 4 times of this, because the kind of investment that you're making is into segments which are extremely capital intensive. To give you the competitors of the XAI, you have OpenAI, and most of you must be using these, maybe already regular users of this. So these names are not alien to you. You have OpenAI, you have Gemini, you have Anthropic. Believe me, some of them are also customers to XAI. They are leasing the XAI data centers, and they are mind-boggling numbers. They are paying revenues of monthly $920 million is paid by Google. And Anthropic is paying $1.2 billion per month to XAI. This is the kind of revenues that you're generating, and these are on compute contracts. Compute contracts are basically forward contracts where you are taking a data center and securing future price hikes in data centers, because these chips keep, the price keeps going up. There is a scarcity of chips, and there are very few chip manufacturers in globally speaking. Again, AI business was this. Let's get into the numbers that this particular issue has offered or has been speaking of. Currently, the revenues are $18.6 billion. EBITDA is 6.58. This number of EBITDA has gone down because there is a merger which has happened for XAI, which has tanked the numbers significantly. The implied equity value, which Deepika has just spoken about, $1.77 trillion. One small information that I will give you. This is a speculative number. Why? Because before the issue happened, there were a lot of analysts which were giving the valuation of this company at half the value. Suddenly, when the issue opened, the value went up to $2 trillion. Now, today, when we are speaking, the share price is fluctuating. That is because of multiple reasons. I'll just give you why that stock price is fluctuating. There is one reason for that. Unlike other offerings where the price is locked for at least a year, here you have a staggered lockup mechanism. People who had purchased this share, who were families, members, and friends, were allowed to sell this stock on the very same day. Some of them are allowed to sell it after a month, and some of them are allowed to sell it after a period of time. And that is why the prices are fluctuating, because there is a lot of selling and buying happening. And whenever selling and buying happens, the price fluctuates. So to answer one question, why the share price is moving so volatile? It's because of this reason. One of the reasons is that. The other reason could be like multiple reasons. Right. It has a cash of 15.85 billion. Again, I've spoken of these numbers already. As you can see, the numbers are mind-boggling. And if you will come to the right, I'll just explain some of these. The left-hand side of the column, revenue. I'm sure you understand. Adjusted EBITDA and EBITDA. There is a difference between adjusted EBITDA and EBITDA. So generally, when we do an accounting, we have earnings before interest, taxes, depreciation, and amortization. So what does EBITDA account for? It has its revenue minus whatever your operating expenses are, manpower, electricity, or any other things which are on a running recurring basis year on year. What is adjusted EBITDA? That amount you add back to EBITDA, which is not a recurring amount. For example, whatever money Elon Musk has spent on the IPO expenses will be added back to the revenue. Why? Because that is not a recurring expense. So it gives a very negative number if you look at it, which is not true, because this expense will not come in future years. Only the recurring expenses will come. So if you have to get a true picture of how the company will perform and how the operations are and what is the burn rate, you actually look at adjusted EBITDA. So whenever you're looking at a company for which an IPO or an issue size is happening, you don't look at EBITDA, you look at adjusted EBITDA. So this is the difference between both. Then you have a margin, which is just a ratio, and operating profit. So if you look at the red numbers, you'll see that the numbers for AI are red. Why? Because capital expenditure is being made there right now. Other than that, if you see the other two areas, space and connectivity, are performing fairly better. I won't say fairly better. Again, they're established businesses, so their revenue lines are mostly sorted out. Three engines, again, we've already spoken about this. Let's talk about the analysts. What are they talking about? How will this stock fare? Now, a lot of people, Goldman Sachs is there, JP Morgan is there. They have given a bull model and they've got a bearish model. Now, this is what we also call as the moonshot. Why is it called a moonshot? Because 2030, another 5 years from down the line, the numbers are jumping not just in multiples of 5, it's jumping in the multiples of, from $18 billion is going to almost $500 billion. So this is the number which Goldman Sachs is predicting, and it is riding on the AI wave. That whatever vertical integration that your launch vehicle and your connectivity is doing, AI is going to be, they are only going to be the player which are going to be vertically integrated. So they do not need to take anything on lease or purchase from any other company. They'll be making everything in-house. Unlike the other competitors, which are Claude, Gemini, Google, they are also leasing out business or infrastructure from this company. They, on a standalone basis, will capture, and they predict will capture almost 90% of the AI market. You have a moonshot model, which I just spoke about. 28.5 trillion addressable market. If you just look at what I mean, these are towers, they're just touching the rock sky. $22.7 trillion is coming from enterprise application, which is only from AI. And look at the right-hand side box, it's 93% of the total TAM. Now, again, if you ask me, have these numbers been scientifically calculated? No, it's all riding on a wave and speculation that if all these launch vehicles, Starship and your XAI models are complete and orbital data centers are completed, then there will be absolute zero competition to this particular company. Some of the analysts are even comparing the SpaceX to the railroad bonds, which had come in earlier 20th century. So if anybody is buying this, may become an overnight billionaire. Cash flow profile, again, if you can see, the red line is the investment that they're making. That is not actually losses, you're making investment. So cash flow statement usually have negative, whichever is the money which is not recovered, and whatever money is coming out is positive. So don't take this as a profit and loss statement, it's just a cash flow statement. Investment activities are usually minus, and the rest of the activities are usually positive in this particular case. Again, spoken about capital expenditure multiple times. Then you have, again, orbital data centers is something which Akshat would like to speak on. Good. Should I?
Yes, please.
See, so again, I told you about what does a data center entail? It entails GPU cost, it entails data center cost, and it entails power cost. What does an orbital data center do? Orbital data center plans to put the data center in space. So then what happens is your power consumption comes down to zero because you have solar energy, which is unlimited power. The bullish model, which the Goldman Sachs has predicted, states that 20% of the data center will become orbital data center. So again, the numbers which we're looking at, $1.7 trillion valuation, is because of this, that it will capture at least 20% of the market. The other model speaks of at least 10% market. The bearish model speaks that it will be zero. So, people are speculating on the achievement of these kind of technological marvels that Elon Musk has been claiming that it will do. For the orbital data center, yes, everything that is required to be done. See, the amount of cargo that has to be taken to the space can only happen through Starship. So they have a launch vehicle, they already have connectivities, and now they're getting into the data center space and artificial intelligence space. So they have everything stacked up. And no other company in the world is actually matching to this kind of capability. Again, revenue numbers already spoken about, registered out, we've already spoken about. I will just come to the investor debate, what is going to happen. So again, there are a lot of contingencies about this. It's the success of this particular deal hinges upon certain factors. One is the Starship execution, which is very, very important, because the kind of payload that you're going to take up to the space, it cannot happen through any other launch vehicle other than Starship. Anything better comes, wonderful. If it doesn't, then you can see a bear model. Capital intensity, again, the kind of amount of money that has to be put. But if you see the amount of money he has raised through IPO, I don't see funding as a challenge. Governance, yes, if you know about this issue, there is a 80-20 kind of a deal where you have dual class shares have been issued. Elon Musk, even after having issued 555 million shares, still retains control of the company. Even though it holds 40%, 45% of the company's shares, he still has control of 80% of the company. So the governance part plays, it's actually a two-edged sword. It can be a kind of advantage because you have a single leadership, but then he can control each and every decision based on his own whims and fancies. And we know if a person gets erratic and too bullish upon his thoughts and ideas, the idea can it can go either ways. It can go good or it can go bad. So governance is something which people have actually paid a price for because they actually believe in that person. Retail volatility is, again, your AI business is actually retail based. A lot of consumers, you do not know their mindset, their shift, or price sensitivity. It's completely volatile. And valuation sensitivity has been discussed by Deepika in detail. Again, bull case and bear case, unmatched profitable. The bull case is in case he has a launch monopoly, Starlink is scaling fast. Then vertical integration, already spoke about it. On the orbital AI, you have an optionality. And then there is a strongly adjusted EBITDA. The reverse of it is completely true. If it becomes, there's a lot of capital intensity dependence on this in this kind of business. The founder has majority control, which can work both ways. I mean, we have written it in the bear case, but it can be a bull case as well. Sorry, competition is already. Yeah, there are 3 already AI cases we are extensively. So, I mean, I actually don't use XAI. None of my peers use XAI. We all use Claude Gemini. So there are AI models which are already ahead of the game, but I think money speaks more than. So if he has money, I think you can actually get ahead of it, or you can consolidate all these AI models and purchase them tomorrow if you have enough money. So I don't actually believe that what Akshay is saying that people are ahead of him. Competition is definitely there, but it could be short term and long term. So if I was planning to buy, I would really bet on this particular stock. I'm not giving you any investment advice, please. So please don't go by what I'm saying. But yeah. With that, I'd like to thank everybody for hearing us out so patiently, and if I'll open the floor for questions. And
If there are any questions, we would love to hear them and answer them. Thank you so much for your time and patience, Eric.
We will unmute all the participants, so you can raise your hand and ask your questions. Meanwhile, while this is being done, we have 2 questions in the chat box. I'll just read it out for everyone to see it. The first question is from Satyam Kushwaha, founder of Chakra Dialogues Foundation. The question is, what lessons can the MOD, Government of India, or private enterprises in India take to work towards designing and deploying an Indian-owned space communication ecosystem? Where do you see the bottlenecks, and what legal policy and regulatory as well as mindset changes will need to be made to ensure that we are able to put a credible, sustainable space communication capability in space? What do we do presently will never allow us to be a big sustainable player in this segment. While answering this question, please consider including the entire ecosystem, including rockets, ground ecosystem, technology, satellite business model, spectrum, etc.
Yeah, okay. Let me take that. I think Satyam sir has asked a very pertinent question. We are already lagging behind the space communication network. SBS2 is already behind. The EOPPP just got flagged, so there is a lot that needs to happen. I think first and foremost, sir, if I may just answer the question from a defense perspective, government needs to get away from this idea of owning assets and paying for building assets on their own. They need to study a hybrid model in India. Because in our context, the problem is not the access to space so much and the access to building tech. It's the time value. We spend a lot of time in policy and procedures to get things done, and you can see that with the current push that InSpace has done with the TOTs. It's happening now back to back. So government needs to come in as the anchor pusher for buying data for fine. If defense needs to own a certain amount of assets, that is absolutely fine. But a hybrid approach needs to be taken. Something that was done in the IRIS2 model by the European Union and the European Space Association. Can I just see the question again? There were multiple aspects to it. Just what do we do to ever allow us to be? The bottlenecks again are the biggest bottleneck for defense is the DAP. They need to see a way around it. And of course, the DAP is currently being discussed. DAP 2026 changes are going to happen. But there needs to be a GFR kind of a policy which comes in, where in 2 single windows or in a single window clearance, you are able to get things rolling. And government needs to focus on how these assets are being controlled by them rather than the ownership aspect of it. If you pay from your pocket every single time, then challenges will happen. You will have to let go and allow dual use to come. So 3 points in essence.
We don't have any more raised hands, so I'll go to the next question in the chat box. Question is from Alicia Contractor. And the question is, what are the parallels or learnings that can be drawn for the Indian space startups?
One key learning, Alicia, is I believe, I don't know to what extent it's practically possible in the Indian ecosystem, but I believe that one thing is the vertical linkage. Many startups are just focusing on one solution and they want to monetize it quickly. I would say invest in infrastructure, make it to an extent where it's saleable, and then you try to integrate into both the downward and upward linkages, whether you want to invest it or you want to acquire it. But a lot of people in Indian startups that I've witnessed is that they just create one solution and they want to monetize on it quickly, create a value, and just remain isolated with that particular product. Vertical linkage is something that I think is a good takeaway from this particular case study.
I think, yeah, that's a very good point. vertical integration and, having stack ready today, he has so many things to fall back on, like Rajat mentioned. There are so many things he's doing and he's already drawn capital from the market. So I think vertical integration and understanding your business model. Also, I think, you see, we do a lot of stock. We also have IPO listings in this country. And Rajat, me, Deepika, we mostly come from a very structured finance background. We have dealt with mostly the debt markets. We've dealt with, securitization of things, where it's the numerical and the numerical justification that runs a company. What we also learned during reading this document is that your story needs to be very strong. It needs to come out in ways that gives investor confidence in how you are doing things and how you're planning things. The idea that today there is an alphabet and under which Google is housed, the idea that, you have a space and then an XAI and then Twitter being merged into it. Imagine Twitter has been merged into another holding company. That has all been done as a part of the corporate structuring mechanism he has, because he doesn't isolate things. For him, connectivity, XAI, data centers are all a part of one big chain. That is the brand of SpaceX. So I think that cohesive thinking also needs to come in when you look at business models to expand your business.
I don't see any hands raised, but there's a request from Emma for seeing the last slide. I think we can share the presentation.
Yeah.
Or we can come up with the
just put the last slide up if he wants to see it. Are there any other questions? Please ask questions if there are any other questions. We'd be happy to answer.
Good. Meanwhile, you can cover the questions received separately.
Yeah. And if there are any other questions, I think you can. We haven't received any questions so far. I think that's the only question that has come. What are the? Please maybe see the last slide once more.
So the last slide is flashed now. Yeah.
Okay. I think before we leave, I think I just want to add this. It's upon you how you look at this entire economic phenomena which has happened in the last 1 month. To my mind and to our minds, I think all these. I speak for all three of us. His story and his success has been very inspiring, and it's something that India can learn from, because it takes a lot of guts to be a computer science engineer and start something on your own and be completely bankrupt and still make it a success story. Fact is, Elon Musk has taken $70 billion from the industry, over $70 billion from the industry. It's a fact that we are all sitting and we're doing a post-listing analysis. So it's extremely endearing to see the largest, most valuable company in the world is a SpaceTech company today, not an oil company, not a private equity, not a bank. So we're in a new age and we're in a new era where data today is above oil and gas. Data today is above, financial markets, capital markets, and that is the world that we're headed at. So it's inspiring. Yes, there are certain things that we can all learn from, like Rajat mentioned in the bear case. Of course, so many things can go wrong, but that's the kind of risk balance that India needs to adopt. That's all. Thank you so much.
So
there's a question that's coming.
There's a question. You want to take it?
Yep.
Okay.
Hi, this is Madan from Orbix Global. So thank you so much for the session. I think it's very wonderful, very useful. And my question is, the SpaceX has 10 times valuation. It breaking the history in the IPO itself. But from the capital standpoint, suppose if there are many regulations are actually tightening up in the space because the debris, because of the sustainability, and all those the regulations are actually tightened up by the various space agencies. And so how are you looking at the capital risk? How this capital risk can be protected? Capital risk can be assessed, especially for the space industry. If you take an example of the SpaceX, because they do have some own capital, they have a big the investors, but at the same time, if you consider the other smaller the rocket launches companies, how the capital can be protected. So what is your advice, and how do you look at this capital risk, how this can be protected for the Indian the SpaceX?
I think, he already has monopoly in the market, but I would again like to go back to the Falcon 9 model. The idea that Falcon 9 already had assured contracts coming from the ISS and eventually from NASA for all their launches. So much so that, NASA made it their main launch pad, main launch vehicle for all its government missions also, is a big win when you look at investors. Secondly, you are a budding company which has just raised capital from the market, Madhu. It's important that a robust pipeline is created on both sides, on the government side of things as well as on the private side of things. So having an assured demand in the future is a good way of mitigating your risk, because your business is very capital intensive. That cost is never going to go down. Once you go to a particular cadence, you would always want to go up and up. That's what Skyroot is going to do. That's what you want to do. You're not going to stop at sub-ton. You will eventually go above a ton. You'll eventually want to target 5 to 10 tons. Please correct me if I'm wrong. So that capex will always keep increasing. I think one of the ways to mitigate the risk, of course, one of the biggest supports has to come from the government in our case. Government needs to become a buyer. Government needs to, give you those subsidies, whether it's in form of land or whether it's in the form of taxes. And secondly, I think assured demand in India needs to come. If Vikram 1 is successful in August, I would urge all younger companies to please have more MOUs with Skyroot and with Orbex or with Agnikul in the future, so that our demand is retained by us, by these people, where the value of the company increases in the eyes of the investors. That's the answer I have. Any other way you want?
Yes, that's all. One more.
There's Atul Gupta asking.
Thank you so much.
Yes, Mr. Gupta, you have a question.
Speaking, you can unmute yourself and speak.
No.
Mr. Gupta, you're muted.
Mr. Atul, you're muted. Can you unmute yourself and ask the question?
He said, thank you, Amshad.
Okay.
He said, thank you, Amshad.
Any hand raised here.
Hand raised.
If you're not able to speak, you can type it in the chat box.
Yeah.
Chat box.
Madhu, I hope I answered your question to your satisfaction. Was there something?
I'm just thinking about so the biggest problem in the startup. Who is actually, say, for example, we have Skyroot and Galaxy and all satellites companies. So all these companies are actually launching their satellites, and they are still, not able to protect their, get the life coverage or insurance coverage for their asset. So that is one of the biggest challenges, because the capital risk to also be protected through the insurance coverage. That's what I'm just thinking how this can be addressed, because this is the biggest challenge in India, especially insurance companies.
I fully agree with you. Insurance, we saw this with the last two PSLV failures. Insurance, like I said, launch cost is capital expenditure for any satellite company. And if insurance is not brought into it, I think it's something which is extremely important, not just for private players to mitigate their risk, but also for national security of the country. Because one of the satellites we lost with the PSLV failure was the Anvesha satellite, which was an Air Force satellite. So it's important that government assets which are going up, which will keep going up. We are a country where national security is of utmost importance, and space is a big part of it. That a cohesive solution with the insurance regulators and the government and DOS needs to be brought. How government can mitigate that. We are currently preparing a paper on space insurance that we would like to share through the means of ISpA eventually. That white paper is still being prepared. I would love for all of you to give your inputs on it, from what we need to do from a space insurance perspective. Atul Gupta has written on the question, what valuation framework?
Atul, if you have unmuted yourself, you can speak your question.
Yeah. So I think this was very useful. Just a quick question. I know we looked at the SpaceX valuation and the framework which you pointed out. Now, companies who are in early stages, let's say tier level 4, what's your recommendation in terms of the valuation framework? we use, rather not undervalued at the same time, not overvalued, right? Company looking at raising capital at this stage.
Yeah, so thank you for the question, Atul. See, I've just briefed out the three evaluation frameworks for if we look at the Indian scenario right now, and we are looking at space tech companies. We may admit that we are at nascent stages of really doing the demand aggregation and building on the upward and the downstream business. So I would say, again, the projections, and in fact, when we're talking about the orbital data centers, getting those comparisons and getting those projections in place is something which could really, not really be so concrete at this stage. So I would suggest that the way SpaceX has played it here, it is really the PM, which is the exit value here, which has become really important. And I think that is something which can actually be learned from there, because again, this segment of orbital data and data intelligence is something which we need to see from a lens where we can see 5 to a 7 year projection, even in our Indian scenario. So I think the valuation and the IRR, that we are expecting here, which because it's a very high risk premium segment, I would say right now. So that is something I think VCM is the method that we can use, because for market comparable and DCF, I would say that, really the comparables may not be at par at what we are looking. So SpaceX, actually, this IPO is a very, very good example that can be looked at it. Of course, there is a lot of personal brand value, which has also gone into the valuation of this company. But venture capitalists would definitely see it, because we must admit the TAM is really big to address here. And that is something that should be really looked upon by the investment bankers when you are actually doing a valuation for any Indian data center company also. If
Sure.
add anything here, please.
Yeah, I think, like you said, market multiples cannot come in directly right now, because very few listings have happened. And most of the companies are still pre-revenue. So once they start getting into revenue is when we getting into some kind of multiples which will come in. PE ratios are too soon to define. We're a very small industry right now. So the venture capital method is what is predominantly being used. In order to come out with we did valuation for GSAT satellites. But these are again for brownfield assets, for completed projects.
They had contracts.
They had contracts. So yeah, I mean, I think, and I think the point that she made is something we all need to look at, which is the beta is now completely, it's been completely, haywire.
Reached at this level only.
Yes, yes, because.
Sure.
So
Great. So no, thank you. I'm based in the UK. I work with Big Bang Boom. We are right now to check if there is a possible steer you can provide offline. We have put together a model, and are you guys happy to look at it at all?
Sure, Mr. Gupta, please share it with us. We'll be happy to take it. Thank you so much for your question and for joining.
So we have one more question from Mr. Shubhankar Ghosh. Is he online?
Shubhankar
Ghosh, are you online? Okay, the question isn't, I think he is there online. Yeah, you can speak your question.
Hi, first of all, can you hear me?
Yeah, Shubhankar, please go ahead.
Yeah, first of all, thank you so much for the insightful session. My question is when the whole question is on the reducing the cost part, right? So there are other kind of domain where some satellites are being refurbished and being reused. What's your views on that?
So I think that's a very good question. In-orbit servicing, or you've written, or what we've done a paper on ISAM also. In-orbit servicing and extending life of satellites is actually a business of wealth creation. It's something that not just satellite companies need to look at, even banks need to look at. What Rajat just mentioned, a satellite's value is how many contracts and how much billing you have here. Because see, a satellite is never coming down. Let's be honest, unless we come up with some revolutionary technology in the next 10 years where we can start deorbiting them. I'm sure work is happening on that too. But currently an LEO satellite or an NEO satellite, if the life has been extended by 40-50%, that's how much the value goes up. And that's how much more banks would be willing to lend you, because you don't have to refurbish it again. You don't have to go for another refurbishment in the 4th year. Satellite companies for LEO and for GEO start typically planning a year or 2 years in advance for their capital expenditure, provisioning. They're okay. My satellite life is going to go away. Let me start, provisioning capital for, extension. What you are doing by in-orbit servicing, whether it's refueling or replacement of the battery or whatever technology you have, is you're giving more wealth to the companies because that much money is now being saved to, invest into other areas, which could be R&D. The biggest problem investors have today is I need my return, especially in a country like India. I need my return to come into me in 18 to 24 months. So please don't waste my money on research and development. Established satellite companies through in-orbit services can actually think that I don't have to worry about refurbishment or replenishment of my satellite. I can use that money that I have earned through scaling up of my subscription contracts and further getting more contracts with escalations to do more research and innovation. That's a game changer. I think more and more investors need to look at ISAM and not to mention space debris is a problem. We've all spoken about the Kessler syndrome so many times that it's going to, we're just waiting for that whole Star Wars Big Bang game to start whenever it does, because at 7 kilometers per second, what's the speed of a, it's literally flying out there, and something would attract into something with that velocity, it's going to be like kaboom. So investors need to understand that if you are mitigating debris, if you're putting less stuff up, that's actually helping the environment and space as a part of planet Earth. From all that perspectives, I think it's something that every investor and every bank needs to take a very serious look at, especially banks and especially insurance people.
Perfect. Amazing. Thank you so much, guys. Thank you.
Okay, so if there are no more questions, I think we'll conclude the session.
Are there any other questions? Please let us know, because we've gone ahead of our schedule. But
yeah, you can send the questions by email also. So we'll conclude the session now. So we've had a very engaging and enlightening session, and all that is left for me to do is to thank the speakers, Akshat Johri, Rajat, and Deepika for taking time out and being here. And also on behalf of the Indian Space Association, we thank all the participants who've taken time out to attend this webinar today. And I hope you go back more enlightened. We're going to have more sessions, webinars like this in the coming days, and I hope you'll all join us again. So I request all of you now, if you can please unmute and let's give an applause for the speakers. Thank you very much. Have a nice day.
thank you so much.
Thank you, Rajat.